Do you ever feel like no matter how hard you work, you're just not getting ahead financially? Do you find yourself stuck in a cycle of debt with no clear way out? It's not just you. Many people fall into debt traps that can keep them poor for years, preventing them from achieving financial freedom. In today's video, I'm going to show you the top 5 debt traps that keep people trapped in debt and how you can avoid them. These common pitfalls are more dangerous than you might think, and breaking free from them is the first step toward a better financial future. Ready to take control of your money? Let's dive in. 1. Credit card minimum payment mentality. One of the most common debt traps is the credit card minimum payment mentality. If you've ever used a credit card, you've probably seen that little line on your bill telling you the minimum payment required. It seems harmless, right? After all, it's just a small amount to pay each month. But here's the problem. This minimum payment typically barely covers the interest that's being added to your balance every month. As a result, your debt keeps growing, and it can take years, even decades, to pay it off. What most people don't realize is that when you only make the minimum payment, you're not reducing your principal, the actual amount you owe. Instead, you're only paying off the interest, which means your balance doesn't go down much, if at all. Over time, this allows the debt to compound, and you'll be stuck paying it off forever with the balance never really shrinking. This situation is like a financial hamster wheel, where you feel like you're making progress but not truly getting ahead. To escape this trap, it's important to pay more than the minimum each month. Even an extra $50 or $100 can make a huge difference in how quickly you pay down the debt. And if possible, try to pay off the credit card entirely to avoid paying any interest at all. Breaking free from a minimum payment mentality is key to getting out of credit card debt for good. 2. Payday and high-interest predatory loans. Another debt trap that can pull you deeper into financial trouble is payday and high-interest predatory loans. When you're faced with an urgent need, like paying bills or covering unexpected expenses, it's easy to fall for the quick and easy solution that payday lenders offer. These loans promise you fast cash with no credit check, but the cost can be much higher than you realize. Payday loans and high-interest loans often come with outrageous interest rates, sometimes as high as 400% or more. This means that while you may borrow a small amount of money today, you'll be paying back significantly more in the long run. These loans are designed to trap borrowers into a cycle of debt, with many people needing to take out a new loan just to pay off the old one. Before you know it, you're buried under layers of debt, and it becomes nearly impossible to get out. The fast cash solution often becomes a financial nightmare, spiraling borrowers deeper into debt. To avoid falling into this trap, always explore other options before resorting to payday loans. If you need quick cash, consider borrowing from a friend or family member, or look into credit union loans, which typically offer lower interest rates. Emergency savings are another great way to avoid having to rely on payday loans. The more you can prepare financially for unexpected expenses, the less likely you'll be to fall for these high-interest, predatory lending schemes. 3. Lifestyle inflation, lifestyle creep. Lifestyle inflation, or lifestyle creep, is another trap that many people fall into once they start earning more money. It's the tendency to increase your spending as soon as your income rises. Think about it. When you get a raise or start making more money, your first instinct might be to upgrade your car, move to a bigger house, or start spending more on clothes, gadgets, or dining out. The problem? You're still living paycheck to paycheck despite earning more. Lifestyle inflation keeps you trapped in a cycle of spending because instead of putting that extra income towards savings or investing, you're spending it on lifestyle upgrades. This makes it nearly impossible to build wealth because you're always playing catch-up. Even though you're earning more, you're still not saving or building a financial cushion for the future. The trap is that your increased spending doesn't lead to increased wealth. It just leads to more expenses and deeper debt. To break free from lifestyle inflation, try to live below your means, no matter how much money you make. Instead of upgrading everything in your life when you get a raise, consider putting that extra money into savings or investing it. This way, your lifestyle can stay consistent, and you can build wealth without falling into the trap of constant upgrades. Remember, it's not about how much you make, but about how much you keep and invest. 4. Buy now, pay later, BNPL debt. In today's consumer-driven world, buy now, Pay later BNPL services have become increasingly popular, offering an easy way to buy goods without paying upfront. It sounds convenient, right? You get to enjoy a new item right away, but you can pay for it later in installments. However, this convenience often leads to BNPL fatigue, where you end up juggling multiple payments for items you don't really need. The problem with BNPL services is that they can quickly lead to overlapping debt. While they may seem like a low-cost option in the short term, if you're not careful, you can easily forget about all the different payment due dates. This can stretch your budget so thin that you start struggling to cover basic necessities like rent or groceries. Overusing BNPL can create a false sense of affordability, and before you know it, you're buried in multiple small debts. The illusion of easy payments can lead to a mountain of small debts that become overwhelming to manage. To avoid BNPL fatigue, it's important to avoid impulse purchases and to prioritize your essential expenses first. If you must use BNPL, make sure you set up reminders for each payment and make sure that the total cost of the item fits within your monthly budget. It's easy to fall into the trap of buying things you don't need when you have the option to pay later, but living within your means is the key to avoiding BNPL debt. 5. Extended term auto loans. Finally, extended term auto loans are one of the biggest debt traps that keep people stuck in debt for years. While the typical car loan used to be 36 months, 3 years, today, many lenders offer auto loans with terms up to 84 months, 7 years. While this may seem like a good idea because your monthly payments are lower, it's actually a dangerous trap. When you take out an extended term auto loan, you can end up owing more than the car is worth for a long period, which is known as being underwater on the loan. This means that you owe more than the car's current value, which makes it difficult to sell or trade in the car without incurring a loss. Plus, with a loan term that long, you're paying interest over an extended period, which means you're paying far more than the car's original price. The longer the loan, the greater the financial strain as you're tied to a car that depreciates faster than you can pay it off. To avoid getting stuck in this trap, consider shorter loan terms like 36 months that allow you to pay off the loan faster and avoid the negative equity trap. If you do opt for a longer loan, make sure you're putting a large down payment to reduce the amount you need to borrow. Additionally, consider purchasing a used car or leasing to keep your monthly payments low and avoid being tied to an expensive car loan for years. There you have it, the top 5 debt traps that keep people poor for many years. From relying on credit card minimum payments to getting caught up in payday loans, these traps can easily prevent you from building wealth and achieving financial freedom. The good news is that you don't have to fall victim to these traps. By being mindful of your spending, living below your means, and making smarter financial decisions, you can break free from these debt cycles. If you found this video helpful and want more tips on managing your money, make sure to like, share, and subscribe. Hit the notification bell so you never miss an update on how to take control of your financial future. Let's take control of our finances and avoid these traps together.